Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors for this segment, Admiral Markets. It gives me great pleasure to introduce Darren Sinden, market commentator for Admiral Markets. Darren, very good morning to you.
Good afternoon, Neves.
Yeah, I guess it is.
Yeah.
I guess,
sun's over the yard, if there were any sun.
Well, if there were any sun. Right, we've got a number of slides to go through. Let's kick off with the first one. Data released over the European session. What's caught your attention this morning, Darren?
Well, it's a relatively slow start to the week, but it's certainly not going to be an uninteresting week. So First of all, we had German retail sales, month-on-month and annual figures. The month-on-month numbers dipped for October, but the annual figures remained strong, so the German consumer looks well set. We also then had, in the UK consumer credit for November, came in at £1.17 billion. That was slightly below the forecast of 1.3 billion. So the jury's still out really about the health of UK consumer spending and the propensity to borrow to fund it at least.
Yep.
So we watch that data next month with interest. Just about now, really, we'll have German inflation data being released. A whole raft of measures coming out this afternoon for Germany. Again, that will be very interesting to watch that as well. Tomorrow, when we have PMI, manufacturing PMI, that is, for France, Italy and Germany, all of those the precursor to the ECB meeting on Thursday, where we'll hear the ECB Council's decision really about interest rates and QE. Likelihood is of a cut, further cut to interest rates, and some kind of expansion to the QE programme, though the full details of that we won't know until Thursday.
Understood.
And then immediately after that, we have the OPEC meeting on Friday in Vienna. Obviously, it was Thanksgiving last year when the Saudis abandoned any attempt at price control and set the oil price off into an effective free fall. Hard to know exactly what's going to happen this time around. It does appear, though, that their plan to cause pain to the American shale gas producers is working. That said, America's getting more and more used to the idea of being self-sufficient for energy and potentially becoming an exporter. So, two juggernauts basically, but bashing up against each other. It could go either way.
Right. And just to add, we have the non-farm payroll this Friday as well.
Oh, yeah, absolutely. Yep. One of a number of key US data points, yeah.
Understood. OK, let's move on to European movers and shakers. I've had a quick look at these before we went to air. That is astounding, the mining index. Yeah,
down another 2.37% today, the FTSE 350 mining index. And as you can see there, the sector's down 44.6% as of Friday's close. Iron ore prices traded below $40 a tonne in Singapore. Other commodities are weaker. And BHP Billiton, on top of that,
5% or something.
Yeah, they've been threatened with a multi-billion-dollar lawsuit because of this mine dam flood and burst in Brazil. Sort of a mini BP scenario developing there. So not good news. Some of us were thinking that maybe we'd seeing the bottom of this sector, but it looks like we could still be some way off from that. And then over in Holland, Delta Lloyd, which is a Dutch insurance fund manager, they have announced a $1 billion rights issue to shore up the balance sheet. They're down 5.96% in trade this morning. Why have they been hit so hard? Well, it's simply this, because 6 months ago they went to shareholders and said, well, don't worry, we won't be asking you for any more cash. That inside a year they've come back and said we were wrong, we do now need that money. So it's a difficult time to be an insurer. There are lots of solvency issues, and it probably won't be the last to come to the market to raise cash, but it never sits well with people when you say one thing and do another.
Let's turn our attention to M&A, the rumours and movers. What's caught your attention this morning?
Yeah, well, with the long holiday weekend in the US, no new news per se, but a bit of a development in the Anheuser-Busch InBev SAB Miller takeover, and what's happening here is that AB InBev are going to try and head off European Commission competition concerns about the merger with a preemptive sale, or at least the promise of a preemptive sale of beer brands if they can. AB InBev says to have briefed its advisors over the proposed sales, but given the likely market share of the combined group, which will be some 30% of world beer sales, it might not be enough to diffuse the EU competition concerns. What are they looking to sell? Well, to keep this 177, I keep having to review that figure, but it's right, £177 billion merger on track. AB InBev is looking for buyers for SAB Miller's, Grolsch and Peroni brands. It's interesting that it's not going to sell its brands, it's going to sell the acquired company's brands. No price tag has been published yet, so as we've already said, AB InBev will retain its Beck's and Stella Artois labels. Potential buyers for those two key brands, Grolsch and Peroni, would be Heineken. Obviously the Dutch connection there would sit well with Grolsch. Molson Coors, or perhaps Ireland CNC, most famous for making cider, but you know, they may want to branch out into lager as well. Each of the brands is probably worth a couple of billion euros, so it's a decent chunk, but I suspect it's probably not enough to persuade regulators that you know, the deal should go ahead. I think they need to sell more. Yeah.
Okay, so let's move our attention to US data points to keep an eye on.
All right. Well, today we've got two regional Fed surveys: the Chicago PMI and the Dallas Fed Manufacturing Index, both of which will shine a light on two sort of economic powerhouses in the US. And then for the rest of the week, we've got manufacturing PMI tomorrow alongside the ISM Index. So again, some key data really highlighting how the old world economy is doing, if you will. That's on Tuesday. And then Janet Yellen speaks on Wednesday, testimony to Congress. We have weekly jobless claims on Thursday, which of course always takes on more of an importance, shall we say, ahead of the key number of the week, the non-farm payrolls for November, the last employment data for 2016, the last one before the Fed meets to decide.
The final hurdle.
Yeah, possibly. I mean, we obviously saw, you know, a big surprise at 271,000 in October. I guess people will be looking to see, A, if we can repeat that, B, what revisions there'll be, if any. A weak number could still possibly sway the Fed's hand to hold off, but I think it's fairly likely now that they are going to do something in December, if only to prove to the market that they are able to raise rates as if it's just a token gesture, if nothing else.
Understood. In terms of US pre-market movers and some chart points.
Okay, well, NXP Semiconductor, that's NXPI, this was up about 4.59% to $88.36 in Friday's short session in the States. Their $40 billion merger with Freescale Semiconductor got clearance from the Chinese regulatory authorities. That's how the world is now. It's not just Europe and the US that rule on these things. The Chinese have a say in large takeover deals these days as well. And then Southwestern Energy, that's ticker SWN in the US, $8.90, up 1.83% this morning pre-market. Might not sound like a big move, but the stock was down over 7% on Friday as the market reacted to further news of big finds in the Utica shale beds in Pennsylvania. So once upon a time, if you announced a big find in...
That would have been bullish.
Yes, it would. These days, the world's topsy-turvy, and if you find more oil and gas, it's not perceived to be good for the... in fact, it wasn't even Southwestern Energy's find. That's the point. This is a sort of sympathetic move, but...
Bizarre.
Yeah.
OK, in terms of chart points, these are the cash levels?
They are. OK, so FTSE, we play 6,300, the round number, versus 6,375. For the DAX, we're looking at 11,280 against 11,390. In the US markets, a very muted session on Friday, as you might expect, with most people off for the Thanksgiving holiday. 2080 is the downside level to watch, and the S&P plays 2094 to the upside. And for the Dow, 17,715 is our downside level, whilst we watch 17,830 on the upside. It's been a very quiet session, really, thus far as far as European equity markets are concerned. Currency-wise, dollar seems to be in the ascendant again. Euro US dollar 105.55 now on the downside. Ahead of Thursday's meeting, 105.95 to the upside, the level to watch. The Aussie dollar US dollar 71.84 plays 72.30. Dollar yen still straddling that 123 handle, so 122.85 on the downside, plays 123.25 there. And cable's been the big mover, testing back to a key level at 150, so 150.00. The round number will play as our downside support, and 150.50 the upside level to watch, but we did test below 150 in early trade this morning. Understood.
Let's wrap up with the last slide, in focus. What's in focus today?
Well, actually, we'll look at that cable exchange rate, and the reason why it is moving in the way it has over the last week. Cable US dollar exchange rate is moving because interest rates, the expectations are diverging, and cable has tested back to, as you said, briefly below $1.50 as markets sense that UK rates may lag US peers in 2016, and if that view persists, then there is scope for a move back to 146.10 last seen in April. Just some simple support lines here on the chart. That's basically where we are now. There's a potential move, and the longer term move back to the April lows around 146.10. And if you want to see exactly why it's being driven like that, there's a chart of cable over Fed funds being the green line, and the further that Fed funds moves away from 100, i.e. the implication being that US rates will rise, so cable begins to weaken, and we'll obviously see that in the run up to the Fed meeting in a week or so's time.
Do you believe the Federal Reserve is going to hike up rates?
Part of me still can't really bring myself to
say
yes, but I have to try and be pragmatic. And as I said earlier, I think they could just do something just to prove that they actually can do a move in the upward direction.
Okay, Darren Sinden, market commentator for Admiral Markets. Thank you for that. That wraps up the Wall Street crossover show. We'll be back same time on Friday. Have a good day. Thank you.